Hi, I'm Jason Kosec, President, CEO, and Director of Integra Resources. Integra Resources is a precious metals exploration and development company focused on unlocking near-surface heap leachable ounces within the Great Basin. Currently, Integra has about 6.2 million ounces of global resource endowment, a preliminary feasibility study on the DeLamar asset, and an upcoming maiden PEA on our Nevada assets.
Jason, thank you very much for the introduction. Nice to meet you. Now, Integra is the recent coming together of two companies, Millennial Precious Metals and Integra Resources. And you were the CEO of Millennial Precious Metals, and you did do an interview with Crux a while back. But I think since you're new to Integra Resources, it would be helpful if you gave a bit of your background and just kind of talk about how, what you're all about.
Yeah, for sure. I'm a structural geologist by trade. I started my career in Northern Ontario at the Côte Gold Project. We put the first holes into that project in 2009. Subsequently sold it to IAMGOLD for about $680 million at the peak of the market in 2012. It is currently the third largest gold project in Canada. After that, I was with IAMGOLD for a number of years, traveling around through all their exploration and development projects. Then got a call from Eric Sprott and Sean Rusin to join the Barkerville team. A partner of my Terry Harbour, one of our partners, we spent 12 months underground ripping that project apart and putting together the kinematic model that unlocked over 7.5 million ounces there. Also did a lot of work for the Osisko group of companies, worked on Windfall with Ruben Padilla, putting that model together as well. Worked it with Mineral Alamos. So technical guy by background that kind of changed my field boots for shiny dress shoes, I guess you could say, is my career so far.
When you were with Millennial, when did you join the board there? When did you become a director, and what stage through that process?
Yeah, so during after we sold Barkerville to Osisko Gold Royalties, Ruben and myself kind of wanted to get a toehold within the United States, and we saw there was a lot of projects that have been overlooked, frankly. So we did over 337 desktop reviews, 72 site visits, and brought Millennial public in 2021. Okay, so Ruben and I and Terry started it from scratch, built a team. We had a historical resource that we vetted, made it 43-101 compliant. It sits at about 1.2 million ounces of open pit oxide. It should be noted that those projects are the highest strip-adjusted grade projects within the basin. Okay, so I think it's important.
So this is Wildcat and Mountain View.
Correct.
Okay, good.
And then the other projects are phase one target generation kind of projects. They get about in the pro forma company about 10% of our exploration expenditures are allocated to them, but there's things in the portfolio that frankly don't get any value. We don't get any value for them right now. Prime example is Red Canyon, which sits 35 kilometers south of the Cortez complex. It sits in the same rocks as Cortez, sits on the same fault, same age of the intrusive rocks. And in 2021, we put one of the best holes drilled globally out there, which was about 54 meters of 4.5 gram oxide right from surface. So, there's a lot of there are a lot of exploration projects in the Millennial portfolio, but on a combined basis, we have a really robust and very diversified portfolio of assets.
You used the word pro forma company. How is that process of integration? How integrated are you now? Are you talking about a kind of a real budget that's kind of approved by directors, or is it still operating on a pro forma basis?
So we had our board meeting last week, so we're fully integrated now. Budgets have been approved for the combined entity. We're really lucky that the Integra team and the Millennial team really had the same core values and really saw the world through the same lens. So from a people's perspective, integrating the two teams were very seamless because George and his team have done an amazing job de-risking and building that team out, frankly, which is very difficult in this space, as did we. And like I said, really share the same strategy and core values. So it was quite pleasant to do.
Okay, and just kind of sticking at the kind of a global level, what's the cash position of the company? Because I know that you've got a $20 million convertible out there with BD Capital. You've drawn down 10 million. You know, what's the pro forma? Well, what's the cash position of the new company?
We're sitting at about 34 million right now.
Okay, and your budget for the in your presentation, I see that nice the classic. I like to think it was kind of the Rand Gold pyramid. I think they were the first people who kind of produced that resources calendar with lots of exploration targets and then a few coming through to the resource definition stage. You work up and you get fewer and fewer to your most advanced projects which are going into production. So you've got DeLamar, which is your most advanced project, and then sitting just beneath that you've got Wildcat and Mountain View. What's the kind of the allocation of the budget and how much gets spent this year?
Yeah, so the budget right now we're sitting at about 24 million. About 80% of that is at DeLamar. The main objective this year for DeLamar is getting the mine plan of operations submitted. Okay, which is it's basically a feasibility level document that you submit to the government, and that's really the major catalyst to kick off the NEPA process. Okay, so most of the budget this year is allocated to DeLamar. Smaller portion.
Sorry, so just on that, I mean that's quite a chunk of money going to that. Does that mean there's lots of infill drilling, geotechnical, kind of capital intensive stuff rather than desktop study stuff?
Yeah, so people forget. Okay, they don't realize how much work goes into preparing these documents. Okay. From the baseline studies, all the cultural, flora, fauna, agricultural studies that need to be collected, all the humidity cell testing, the geotech, the met. We drilled, we had a pretty extensive 12,000 meter program drilling all the stockpiles. There's a lot of money that goes into these things to significantly de-risk them and get to a permitting stage. And I should touch on, that's one of the reasons why, after looking at it, a lot of projects in the basin, the DeLamar team has done a fantastic job getting it to where it is, to submitting that mine plan. And frankly, I've looked at a lot of things, we've looked at a lot of things, and not a lot of companies are going out there doing it, frankly, because they don't have the financial capacity or the technical capacity to do that. So that's why a lot of the money is going there to enhance all the engineering, all the baseline studies, and the budget for Wildcat really is all the exploration step-out drilling that we'll be doing with some met, some geotech, but we'll be primarily focused on growing the existing resource base as we see. Correct, at Wildcat. Mountain View.
Just sticking with DeLamar. Sorry, I'm gonna stick with DeLamar. Presumably, if you're submitting a mine plan of operations on an advanced resource, DeLamar, and you've got 200 million tons. I mean, this is a big. It's a big operation. Presumably, you've got to kind of do a data cutoff on your baseline studies on your flora and fauna, and so you'd perhaps. I mean, I looked at some of the data in the presentation. And to me, it looked as if the exploration upside was relatively limited. And then there's part of me thinking, well, you probably don't want to change the overall resource that much, because if you've got a mine plan of operations, you don't want to have to resubmit that for any changes. I mean, could you perhaps talk a little bit about that?
Yeah, so as soon as that mine plan is submitted, that's what's going in there. And as soon as you start drilling the exploration stuff, it's through connective action. It can have implications on what you've submitted.
Okay.
So, when I'm talking about 24, I'm talking about from January till December, okay? Right? So a lot of that has been spent. There's still some baseline work that needs to be completed, and obviously the updated resource, and also the final kind of putting together the documents still need to be done. But there's still a little bit of work to be done at DeLamar, including some geotech, some condemnation for the condemnation holes, and some more med drilling.
But essentially, the kind of the growth phase is you're not trying to expand the envelope now. You're trying to de-risk and grow the value of each ton that you've got.
Exactly, and that's why these companies fit so well together. Okay, is that DeLamar is going. We all know the famous Lassonde curve, right? So DeLamar is going into that boring stage through permitting that takes 2 to 3 years. But what really complements these two companies is that Wildcat and Mountain View have only been drilled on a 5-acre permit. So combined they're about 24,000 acres, and they've only been drilled on 10. So August, September, we're going to kick off that exploration program at Wildcat, then move to Mountain View, to give you that really exciting exploration sizzle that is commonly played with single asset companies, right? So you get a lot of growth through the resource sector while DeLamar is in the permitting stage. And as those projects roll over, DeLamar goes into the construction. So there's a lot of great synergies, and not only from a news flow perspective, but from a people perspective and a cash flow perspective. So once the mine plan is done and submitted at DeLamar, that team then switches over to Wildcat, that team switches over to Mountain View, and we keep that cohesive unit together that has the experience and has the track record. Because one of the things that plagues this industry, I was just on the phone with Tony McCooch, is people.
Yeah.
Finding people to do the right work, quality work, is really something that we see in this sector that's going to be a problem down the road. So, I also like I said at the beginning, is this transaction was about securing the most quality assets that are complementary of each other, but also securing the top talent in the space moving forward.
The work that's done in the feasibility study is grueling. It's. I mean, I'm not to say that the work in the exploration phase isn't grueling either. You've got to be meticulous in your exploration phase, and there's no doubt about that. You've got to have good systems. You've got to have good science. But it can sometimes feel in the feasibility stage that you use the word sizzle. It can feel, and you talked about the boring phase of the Lassonde curve, but it's so crucial to get that team motivated through that program. And quite often friends of mine, they think about leaving a company when they get to the feasibility stage. And for me, I think, well, hang on, how often is it that you're on a really good project? And that's actually when you see all your work coming to fruition. If you can get it to the construction decision, that's the rewarding point.
Yeah. I think, I like to say, as much as we're in the business of discovering ounces in a systematic and scientific manner, one of the biggest things that people forget is, as a management team, we're also in the business of risk mitigation. Okay.
Yeah.
And there's a lot of value that is unlocked during that stage. For example, permitted ounces in the Great Basin on a PNAV consensus basis go for 0.9. Okay, we're trading right now at 0.15. So there's a lot of value to be unlocked during that stage if you can do it in a timely and cost-effective manner. And frankly, it's people don't like doing it because yes, it's boring, but it's fundamental to our business and to our sector. I think that's where a lot of there's a real niche in the space is doing that those hard work, and frankly it's boring because the market doesn't give you any credibility for it, right?
Well, let's talk about that, because the market is tough. I mean, just look at your share price. It's come down a lot. Well, okay, it's your share price now. The Integra share price was at $5.50 or $5.40 a couple of years ago. It was in the middle of July, end of July 2020. So coming up for 3 years ago. And for the last year, you've been kind of 60 to 70 cents. It's been pretty brutal, and the market is still brutal. How do you how do you reconcile that mentally when and you said that you're trading at 0.15 of NAV and the peer is 0.9? How are you going to close that discount to your peers?
Yeah, the whole sector has been tough. All right. And, you have to remember that Integra put their PFS out for the oxide and then the sulfide component, right? At the peak of inflation. And they got hurt for that. We got hurt for that, I guess you could say. But the focus now is, we'll take that on the chin. And the focus now is just focusing on the oxide component and then attacking on the stockpile component. So in the oxide component of that PFS, there's about 81 million tons, okay? And you got about, at $1,700 gold, you about 315 and change of NPV at 5%, at 33% IR. That's taking in 80 million tons, okay? Those stockpiles that we've been drilling, that's like an in situ deposit. There's 76 meters of 0.7 and 111 meters of 0.6. There's a lot of value that is not baked into the company's NAV. So showing that updated resource for those stockpiles, showing the grade, and then doing another, either we're going to be transparent here, is either we're going to do a feasibility, pre-feasibility updated on the oxides only, or go straight to a fees. We're working on that internally right now. Okay.
Just on those stockpiles, is the plan still to have that resource out by the middle of the year, in Q2?
Yeah, we'll have it out by the end of June. Yeah.
And on the back of that, you can either update the PEA,
the PFS.
Sorry, the PFS. You can update the PFS,
or we'll go, or go straight to a feasibility. So most likely goes straight to a feasibility.
Yeah, because you've got the extra data now of having done the work for the mine plan of operations. So you've got that extra data, so you may well be able to do that, and you probably only have to do a little bit of optimization and scheduling, kind of toggling for kind of right sizing it.
Yeah, exactly. And how you work those stockpiles in? Do you put it on the front of the production profile? Do you put it on the end? Do you blend it in the middle? All that optimization work, once we get the updated resource and have those solid numbers, is what the team is going to be going through. We have rough ideas internally, but that work needs to be done. And then there's a lot of value you'll see that'll be unlocked in the updated resource and the PEA on the Nevada assets. So on a combined basis, you could see something that's going to push over 200, close to 250,000 ounces per annum once everything is up and running, in a resource endowment of over 7 million ounces. And I think, to answer your question, how do we get that close that gap? I think once you put all the data out there and allow the market to see what we're really looking at and the true size potential of this, I think that's when we're going to really catch up to our peer group.
I will want to come on to Wildcat and Mountain View, but I just kind of keep getting questions popping into my head about the oxide profile and the metallogenic mapping and the mineralogical understanding of the transition between oxides and sulfides and structure, and also how the density of your drill spacing in your stockpiles. I mean, will you be able to go straight into mine scheduling on the drill information, the resource information you've got within oxides?
Yeah, so we've done over 64 bottle rolls and about 64 columns, 456 bottle rolls. Okay, so there's a lot of met data done on this. Okay, the average drill spacing in the stockpiles is 60 meters, and then we did some short range variability at 30 to see kind of what the conversion would be. But those stockpiles, we should have most of them into indicated. Okay. Right.
Onwards. Hopping over the state boundary and going south from Idaho to Nevada, the silver content seems to fall away, and you're into a kind of a gold zone. And you've got some very. I see that at Wildcat the grade is 0.4 grams per ton gold, but your strip ratio is 0.16. I mean, it's phenomenally low.
Yeah, and I think that's what I always like to tell people. Grade is great. It gives you some wiggle room. But at the end of the day, it's mining is like any other business in the world. It just comes down to margin. So we like to look at things on a strip adjusted grade basis, and then you can obviously times it by your recovery if you want to see how it stacks in line with our peer group. And like I said, on a strip adjusted grade basis, those assets in Nevada are, you know, the highest strip adjusted grade in the basin, and, you know, have recoveries in line with everything else that we see out there as well.
Do you just simply just take the grade and then divide it by the strip ratio? Is that what you mean?
Yeah. So yeah, exactly. So it's important because it's how much waste you have to move to get to your ore, as you know. The other thing that's really important too is from a permitting perspective. You know, Wildcat, because there will be no waste rock facilities, all in pit dumping, and there will be no pit lake. We believe we can permit it under an EA. So you shave off about 1.5 years, 2 years on from a permitting perspective.
Sorry, what's an EA?
An environmental assessment.
And is that that's a state level, not rather than federal?
Correct. State. Yes, exactly.
Okay, good.
Correct.
And surely there's I mean, a bit of a kind of a joke question, but surely there's no structural geology in an open pit oxide gold deposit.
You know what? So at the top of the system, no.
Yeah.
Right. Because as the fluids migrate up the fractures, they hit a more permeable horizon. And when you take off confining and lithostatic pressure, it causes this flash boiling. So in the rhyolites, you have good porosity and permeability, exactly like DeLamar. But the fractures that are controlling the mineralization, the bonanza zone that sit below that is where you get into the structural controls. You know, Wildcat and Mountain View and Wildcat and DeLamar for sure. You know, those veins were mined in the turn of the century. You know, ounce plus material, but down in the valley. So we're just looking at the top, taking the top off. But the main feeders of them have the structural control, and that's where you can get your ounce plus material. A lot like Florida Mountain at the DeLamar Project.
When you were building the portfolio, did you do a kind of a prospectivity map of the whole area? Did you do a kind of a structural analysis, or did you not need to do that because there was old-timer information and enough data points for you to just say, well, these are the hotspots?
Yeah, no. So we did basically a whole generative work of basically the Southwest U.S. Obviously, wanted to avoid California, Colorado, Wyoming, Montana. Basically, just stick to Idaho, Utah, in Nevada, and just looking at really the state level geology maps and looking for prospective ground, looking at companies that had prospective ground, doing a quick desktop review, and then of those we filter them on obviously geology, alteration, any geophysics we can get, any historical drill holes that we could find, and then go basically down to a site level and start doing a lot of site tours.
And then it comes down to access and availability and entry cost and
it's like who you can do a deal with, and we were lucky. You know, we got the ounces out of Waterton for $10 an ounce.
Okay,
which is you know. Really good, right? Your drilling cost is about $10 to drill off.
And just looking at 20% of 24 million, it's kind of getting close to $5 million of exploration budget that you've got for the year. Let's call it $4 million for the rest of the year because you haven't done a lot of exploration drilling so far. Is that a kind of a fair kind of guesstimate? Yeah,
we got about 2,500 meters planned for Wildcat. You know, and those will be bigger step out holes for sure. And there's also a little bit of some gaps in the met data that we want to fill in too within the pit at Wildcat. So that's pretty much our budget for that. We are doing some regional mapping at Cerro Colorado, which is a copper porphyry project in Arizona, but very small budget for that.
And have you got a drill budget for Mountain View?
Not this year, no. Mountain View is really, really, really tricky to drill because it's covered by about 150 meters of alluviums. So it's really tricky to drill through it. And it just costs more. And from when we're looking at your production profile, Mountain View comes off last. So we want to get DeLamar and Wildcat, get them into the pipeline, and then we can then move on to Mountain View.
And you mentioned a whole bunch of other prospects, including Red Canyon, with that lovely drill hole. Will you be sending crews out to be doing trenching, rock chip sampling, mapping, kind of regional work?
No, so a lot of that regional work was done last year. We're just doing the Sierra Colorado stuff right now. We did a lot in the wintertime because it's just south of Tucson, so it's quite hot there in the summertime. So then those early stage exploration projects, is pretty much focused on Sierra Colorado this year.
Okay, and that's sorry, you said it was a porphyry potential.
Yeah, it's a copper porphyry. It sits right in the Laramide Porphyry Belt, just south of the Mission Mine. Clot around us is BHP. It was originally a historical silver district pre-World War One, and then in between World War One and Two. And what we see is there are these deep-seated epithermal veins that form this conical shape around this porphyry stock. So very similar to stuff that you see down in the Miocene belt in Argentina.
Good. Well, good luck with all of that. In terms of the news flow, what should viewers be looking out for? I mean, we've obviously spoken about the resource update. That's kind of a key one, and that's coming in the next, where are we now, middle of May, 6 weeks.
So from a news flow perspective, we got 9,000 meters, about 247 holes from the stockpiles that we'll be releasing. We'll release the final MET report from Wildcat and Mountain View. We will have the updated resource at DeLamar. We'll have the updated resource in PEA at Wildcat and Mountain View. That's a joint PEA because they share the ADR plant. Then we'll kick off the exploration program at Wildcat. Then we will submit the mine plan of operations at the end of the year. So a very catalyst-rich story. And there's only about 30% float on this stock, and it's in the hands of some of the biggest institutions globally. And we're really lucky to have Silver Wheaton in there for 9.9 and BD Capital for about 5. So there's significant project validation with those two groups.
Did you go around and meet all of the instos before the merger?
Oh yes, George and I were on the road for about 3 weeks. Pretty much did a lap around the world, and then went straight into BMO and launched it at BMO. So we were very lucky that our shareholders were very, very supportive. And frankly, the reality is that there's too many bloody junior companies out there, right? This merger saved us $2.5 million US in G&A alone. Okay. And there's not enough people to do these. So all of our shareholders were very supportive. You had Joe Foster at Van Eck coming out publicly and endorsing this and saying, this is frankly what needs to happen in the space to make us relevant. And by doing this, we created the go-to vehicle that has the size and the scarcity factor that separates us from our peer group.
You just got to persuade some of those institutions to buy on the open market, not wait for the next placing, and that'll move the share price when you get one of them buying or building their position in the open market. That would make a difference. Yeah, no,
it certainly does. But one of the things we're focusing on really this year is a lot of the U.S. retail and the U.S. retail brokers. Because we have our NYSE listing, we're fully Blue Sky compliant. So U.S. retail brokers can recommend this to their clients. And if you go look at how many developers and explorers have a full NYSE listing, it's very few. So when you go out marketing, you want exposure to growth in gold and silver in the best mining jurisdiction in the world that has an NYSE listing. There's probably, you can count them on like maybe one or two hands. So I think that will help, obviously, unlock a lot of value too.
Good. Well, go get them. The world hasn't sat up and saluted yet, but maybe one of the any day now.
Yeah, well, it doesn't help when gold's down $25 today, but the reality is that we're going to unlock this value over the next kind of 2 years. the trains leaving the station. And, you know, as a management team, we just put our heads down and do the proper systematic scientific work, and be really transparent about it. And eventually the market will reward you for that. You know, if we had to look at our day-to-day share price, I probably wouldn't even have any hair left.
And when might you have to come back to raise more capital? Is it sometime in 2024?
Yeah, it'll be in a Q1 of 24.
Good. Well, good luck until then. Jason, really nice talking to you.
Yeah, you as well, Marilyn.